Anyway, let's talk about something new here. Let's talk about the stock market.
Talk about the stock market. Okay.
I've been getting real into the stock market since
Are
shout
you
out to Miss
okay?
Brown.
Miss Brown.
Uh yeah.
Go ahead. Go ahead.
So, I've been trying to figure out how I want to invest for a while now because I
Robin
know I
Hood.
want to get into it early and I want to be, not Robin Hood. Um I want to be able to like not I want to be able to say, "Hey, I'm an investor," and I also want to be able to have money from
You
those
just
investments.
you just want the clout of being an
So,
investor.
it is pretty cool though.
I agree.
Um
It's pretty cool.
so,
Okay.
um
I don't know anything about the stock market.
you
Like
know
I know
nothing.
the bare basics that I need to know to say like this is good or this is bad.
Yeah,
So
buy low, sell high,
yeah,
that
I
kind of
know
thing.
that. I know like the basics of like day trading. I know
Right.
like how stocks can affect the economy domestically and globally.
Right.
And I know how
As
important the
per,
stocks are to Mr. Donald Trump.
okay, so there was an interesting development today because surprisingly, over the past few years, the stock market has dipped per every election, which makes sense. It's a time of change. It's a time of disruption. You don't know what your stocks are going to do,
Sure.
who's going to get regulated, who's going to get screwed over. It's just a time of uncertainty. So obviously everyone pulls out. Yet today, there was a spike, a 58 point spike in the S&P 500. So for those of you who don't know, the S&P 500 is the top 500 corporations in the world, uh, leaders in their fields. They're on an index, so you can look and see based on that index how well the stocks in general are doing, and therefore how well the stock market is doing. So it raised 58 points today, and my theory right now, there are these things called shorts that you can buy. They don't really make sense. I'm going to be honest. They're kind of confusing,
Okay.
but you pay money to buy stocks hoping that they fail in that within the next like 24 hours, and then you can make quite a bit of money off of it.
Right.
And
I
so
don't
my
understand how
theory,
you make money off of it, but it's
I don't
there.
understand how you make money off of it
Money
either, but
happens.
you make money. I think it's because the stock dips, so people are going to start buying that stock.
That makes sense.
I don't. It's really
It's
complicated market
strange.
talk. So
Nobody
yeah,
really cares, from what I know.
you make
Nobody our
money.
age
You
cares
make
about the
money.
stock market.
Yeah. So
Shorts.
the stock market rose 58 points, which I'm assuming is because of these shorts, because everyone's expecting it to fail tomorrow, which is
Sure.
totally realistic. So I was looking at the market, and you can invest in these things called index funds.
Index funds. I
So
know about
index
them.
funds, yep. So index funds are based on an index like the S&P 500. There's other indexes, like there's an oil index, there's a steel index, like you can look at materials
So
and
why,
whatever you want to invest
if
in
I
and
may
how they're doing.
interrupt,
Mhm.
why do you specifically always refer to the S&P 500 rather than like the Dow Jones?
Well, the Dow's only 30 companies. The Dow's 30 strong companies that I'll give you that, but in a way, you're still placing all your eggs in one basket. 500 to 30 is quite a big difference.
Sure, sure, sure.
You may not see as much fluctuation in the S&P, but it's still a safer bet than the Dow.
Yeah, and one would assume that it's a more accurate representation
Yeah, yeah.
rather than
So,
like the global super companies.
mm, so index funds, uh, you would invest in the index fund. So you're technically, instead of investing in a single company, you're investing in in like a part of every single company on that index. So if I were to invest in a index fund for the S&P 500, I'm technically taking a piece of every single stock on the S&P 500,
Interesting.
separating my eggs and putting them all in separate baskets and just waiting and watching. It's pretty stable. Um, you would do this because if you were to put your money into a bank account, uh, you're not generally going to make. So you put money into a bank account and you know it grows interest.
Sure.
But the interest today, the interest rates are not going to cover inflation rates.
Yeah, it easily takes like 10 years to get anything substantial out of an interest bank account, and
Right.
even then, it's just going to be a waste because of inflation.
So
I agree.
while it is slightly uninsured and it is a little bit dangerous if you're not paying attention, not careful about it, you invest into an index fund and you just leave it there like a savings account.
Sure.
And the general return rate for the S&P 500 for the past like 10 years has been like 10%. So not only are you going to be making money off of your money, but you're also going to be pulling out the same amount, the same value after inflation later when you need to pull it out.
That's cool.
So it's a lot. It's a little bit riskier. At the same time, it's a lot more profitable,
Sure.
as most things are.
Bigger risk, bigger reward kind of thing.
Yeah. Um,
So where are
yeah.
you in this process? You say you want to
Yes.
invest. How
So,
what research have you done? What are some viable options for young people like you who don't necessarily have a lot of money?
right. So, uh, one of the reasons I haven't really invested is because I don't have a lot of money to choose to invest with. Um, so I've just been watching currently, and my theory was back in September, not even September, back in like August,
Okay.
was to buy stock, then hold on to it until probably last week. I would have sold last week
Yeah, that makes
and
sense.
wait for it to dip because it was going to dip. It's going to dip tonight. I'm sure of it. And then I would have uh, bought tomorrow or bought maybe next week when it's starting to recover. As you have to remember, this is also the beginning of the fourth quarter.
Right.
So, or I guess it's the
It's one of them.
yeah, it's the fourth. It's one of the quarters. It's one of the important ones. And as you know, Black Friday happens, stuff like that, where
Black Friday does
consumers
happen.
go out and they do pay for products, and companies generally make some money.
Sure.
Um, so then you would invest right before that happens, watch it go up for winter to January, and hold on to it for a little bit, and then reassess the situation then. It's all about holding on to something, reassessing, and seeing if you want to continue, seeing if it's a little bit sketchy. But yeah, just have to make sure you're paying attention.
So
Um, I was
if
gonna
go ahead.
go ahead. No, you got
Okay, I was gonna interrupt with a thought that I had.
a thought. All right,
I
let's hear it.
guess it's a question. I don't know. When I think of the stock market, that plan that you just told me, theoretically, everybody's doing that, right? So, what like to me, the stock market seems so dangerous because we are all like doing the exact same thing, and it's kind of just whoever like sells first just triggers a collapse. Like that's what it seems like. If everybody's doing kind of like the same
Yeah.
thing, everybody's kind of hoping everybody else doesn't fuck them over. But it
Hmm.
seems so fragile to me because as soon as someone sells, everybody's going to sell, and then that's how you get like massive dips or rises.
Yeah,
It's
and
because
usually when
it's
usually
all
when that
signs.
happens, and if that does catch you off guard, it does usually rebound. But you wanting to look at events that are going to be really hitting the stock market, like
Sure.
when COVID happened, people knew things were going to dip and things were going to dip for a while. So you want to think about the event and how long it's going to impact the stock market.
Understandable.
That's how you're not selling when everybody else sells. You're just like, okay, let's wait this event out.
Okay.
I think things will be all right. Maybe buy more stock when it dips.
Yeah, it's just like a metaphor would be like we're all trying to catch an animal with like a box and a bait underneath the box, and you're like trying to pull the stick at the right time to trap the animal.
Yeah,
Like I feel like
yeah.
everybody's using the same box with the same bait, and it's just like
It is a
everybody's
little
trying
bit
to catch
chaotic.
the
Yeah,
animal. You know, like it's not. I don't know. The stock market is scary. It's actually
it is
terrifying to
scary.
me.
It
I
is.
don't
It's very
understand it.
intimidating.
I don't want to understand it. I want to leave that to the money, money
The money men.
grub
Yes.
people, who care about that and leave me out of it, I guess.
Yeah. Uh, yes, I totally understand that and agree. It is very volatile, especially now. It's been super, super unpredictable.
What does Trump expect to happen? Should Biden be elected or should he be reelected? Do you know?
It's really okay. So Trump thinks that it's going to crash. I think regardless of who gets elected, it's going to crash. A
Okay.
stock market crash is not as scary as you would think. It's not the Great Depression. It is. It could lead to a recession. We just had a recession, and then we had a what it's called, but it's when the stock market goes back to normal. That kind of happened mid-summer, and then now we're seeing the cycle happen again. So it's this constant cycle of recessions and
Rebounds, maybe
rebounds or something.
something like
Some economic turn for stock market rising, and it all depends on how stretched out that
that cycle
line is
is.
of that little S curve. So the only time it becomes a depression is when it's like that for half a year, when it is a recession for half a year.
Interesting.
So then it becomes a depression, and in which case, stock market isn't doing great, and you
And then we
probably shouldn't
all run
invest.
around
You
screaming
probably
and
should have sold
celebrating.
before. You don't necessarily need to run around screaming. Maybe it's time to elect a different president. But
You okay there, buddy? You need a cough drop?
I was that was like a comedic cough, yeah, like a hinting
I got,
thing.
I got that.
Yeah. Okay.
Okay, so let's see you as a young person
Hmm.
wanting to get into this business. I'm
Right.
assuming people look at you as a dumb idiot who doesn't know anything, but
Of course.
possibly you might have like innovative ideas because that's how business works, really.
Right.
So like, have you talked to anybody who's involved with the stock market? Have you like had any
Yeah.
revolutionary ideas on the stock market? Like, what are your plans?
I've talked a lot to Mr. Colvick, of all people, our old
Interesting.
principal. He was a big investor. He still is investor. He's kind of been on the same plan as everyone else, as I said. Everyone's
Hmm.
pretty much following everyone else, as you said. And yeah, so I mean, not to say that I'm following in his footsteps, but I'm understanding his advice and what he's saying, in which it is a very volatile market. That's what pretty much everyone has said to me, that it's a bad time to invest, but if you're going to do it, this is how you should do it.
Okay. Well, I mean that's good that at least you're getting that
Yeah,
advice.
yeah. So I'm not super dumb.
Do you plan to make this
I've
a
also
career?
looked into. No, I just think it's really fascinating and it's an easy way to make money. And you know me, I'm a
Um.
businessman.
Oh. Oh. I did.
um,
There were so many things I could have said there. I did not expect businessman.
I'm a man of many hats.
I'm, I'm a man of many hats.
Yeah.
That's good. That's good.